Time for a hot picks section of the program. Today we're going to talk about the pharma sector and biotech, where we often hear about big new treatments for everything from Alzheimer's to diabetes. And of course, we've got a lot of focus these days on obesity-related drugs. Our next guest, Geoff Meacham, Managing Director at Citi Research. He covers the U.S. pharma and the biotech sectors. Great to have you with us, Geoff. So many big themes right now. I guess when you're trying to take all those big trends and figure out which names to watch, what do you think for? What's sort of the starting blocks of that conversation?
Yeah, thanks for having me, John, first of all. I think when you look at what's been affecting the space over the past, say, 6 to 9 months or so, it's really been policy as a big overhang. And so that's when we think about, what are our favorite stocks for the year? It's those that are maybe less affected by MFN, for example, or most favored nation, or pharma tariffs and the like. Not even considering fundamentals, right? So policy tends to be the topic one of the conversations with investors these days.
Okay, let's go through some of your individual picks. So obviously there's those, those considerations on what's happening based on policy. And then Eli Lilly is one company you've been quite constructive on. I think they've sort of mainly been in the spotlight because of their rapid advance in the growing weight loss drug market that is only a piece of the pie. But give us your sense on Lilly and what you think about this company going forward.
Yeah, I'd say, fundamentally one of the best positioned stocks in our coverage universe, fastest growth, least affected, I think, one of the least affected by policy. But to your point on, on the speed of the weight loss market, the growth of the market, Lilly's very well positioned today with respect to their positioning versus Novo in the obesity and diabetes market. But in the future, though, their pill called orforglipron has been sufficiently de-risked in our view, and that's a drug that could launch next year. It's in numbers, but I would say the speed of that drug and the pace of it launching, I think it's going to be really dramatic. It also shows you that it's not easy to develop a drug that's an oral for weight loss. Looking at Viking today, just the stock really under a lot of pressure on underwhelming data. So Lilly, I think their experience in obesity, diabetes drug development really shows here. Okay,
let's move more to, dare I say, a sort of a biotech pure play, Vertex, a company that has a lot on the go. Maybe you can sort of explain what's the makeup of this business and why it makes your list as well.
Yeah. So Vertex is one of the faster growing biotechs. They are mostly an orphan drug company. Their main drug, cystic fibrosis, is for a disease known as cystic fibrosis. The thing that investors have struggled with is what's the encore to their success. They have new drugs approved in pain and also a cell therapy in the area of a sickle cell anemia. And next year they could have data emerging for a kidney drug. But for the most part, though, the CF franchise, I think, is worth more than the stock is today if you add that plus the cash. And so you're not paying a lot for the other businesses, but certainly Vertex, has a long history of high innovation, disruptive drugs. Just happens to be that their pain launch, has had its bumps, but it's only the second quarter. And so we will give them the benefit of the doubt. And of course, they're pretty far ahead in terms of competition and non-opioid pain drug development.
All right. And then finally, Gilead, G-I-L-D, is on your list. It does come up with a lot of people who just are sort of broader market investors as a company that, when you look at the financial picture, oftentimes arguably has a lot to like. A company known for its targeting of HIV. Give us the lowdown on Gilead.
Yeah, so Gilead's had a very good year. I would say, again, that's the theme here, is maybe less impacted by, policy, depending on the topic of the day. But in their core business in HIV, it's still growing. This is for HIV treatment and a minor contribution from prevention. But looking forward, they're just now launching a drug for HIV prevention. It's called lenacapavir is the generic name of it. And that should be a very, very well positioned drug, given that it's every 6-month injection. They also have a hematology-oncology franchise still growing very nicely. So it is, as you mentioned, it's a diversified, product portfolio. But the launch in HIV prevention this year, the launch next year in a cell therapy for a multiple myeloma really positions Gilead, I think, quite well for the next, say, 5 years or so.
Okay, and then I guess just a final question. We're talking kind of about a mix of big pharma and biotech here, and with all of these companies, how trials end up playing out. The progress in getting to market, so important. Even today we were, covering with Viking. There were some high expectations there, and when trial results don't go as you hope, sometimes you see big reactions in the marketplace. So if you're investing in these kinds of companies, maybe it's a different question for big pharma versus biotech, but what's sort of the time commitment? What are some of the other considerations for investors?
Yeah, so our bias is definitely towards the bigger cap drug companies, be it large cap biotech or major pharmaceuticals. And I think those companies have, baseline of revenue and profit where they're less affected, I think, by clinical trial data. So I think that's for an individual investor, retail type of investor, that may be the safer or relative space in the drug world. If that's still not, in the cards for somebody, I think looking at a basket of small caps may be the way to go. But I'd say, you probably need 5 to maybe 10 stocks, which is a little tough to pull off from just babysitting that number of companies. But you're going to have, I think, pretty good performance. You're not going to go, it's almost like a venture investing kind of profile. But this mid-cap space in general, though, I think has been really under a lot of pressure over the past, few years, just given oversupply of new names and also higher interest rates. Just the level of the time to discount a new product launch, I think, is a long way away. But nevertheless, I think that we could see a return of optimism in small cap biotech looking to next year. But a basket approach is definitely the right strategy, I think, for that for that end of the market.
Okay, Geoff, appreciate you joining us today. Helpful conversation as always. Geoff Meacham, who helps to cover both the U.S. pharma and biotech sectors for Citi.